Hey, good evening, everybody. Doc Severson with you here. We got Mav. Today is Wednesday, the 14th of November, and we finally got some volatility today, didn't we?
Yes, we did. Yes, we did.
Yeah, range contraction leads to range expansion, and we got that in spades today. So, what do we drop down to? 5,600? Seems like
Yeah.
we're finding some support there. So we bet, in the last couple of days, we've moved about $800 versus the US dollar in Bitcoin. So pretty significant move today alone was something like 12%. Good evening, Matt. Thanks for checking in. Hope everybody can hear us okay. All right. Looks like we are broadcasting. So, look, really today's session is just going to be about, what's happening, what's moving. Don't know if you guys got a chance to listen to the video tonight and my thoughts on it, but kind of what we talked about in the Discord room as well today about what's happening today. I think most people had the right idea that this is actually a good thing. And my analogy, when you get a day like today, imagine if you're out there hiking in the woods and you come across this perfectly smooth, calm pond of water. And you just can't help it, right? You have to pick up a rock and throw it in the middle of it. And you're going to see ripples go back and forth for the next 30 minutes at least, until the water calms down and all those ripples go away and stop interfering with each other. Hey, Brandon, welcome aboard. And so we're going to have this type of volatility. And I've seen this in every type of market. When you go from something that's really quiet and all of a sudden it gets really noisy in a hurry, that usually sticks around for quite some time. And it's similar to the market character that we talked about. Quiet and trending moves to sideways and volatile. Normally that moves that way to the upside, but it also happens to the downside as well too. Hey, Sam. Hey, KJ. How are you guys doing out there? Welcome aboard. So, maybe some of you have not been through this element of a bear. Certainly we had a nasty bear and then it's gotten quiet. And this is sort of the great big bear flag before I think that we get the finishing move off here. So hopefully we get the finishing move. And then at some point here, when everybody gives up on this market, we will start to trend again. That's usually why we call it the disbelief.
Disbelief rally.
Yeah, the disbelief rally. So, yeah, I actually, Matt's got a question here about, was there a cause for today or just manipulation at its finest?
Yeah, the cause was that it was Wednesday, or the sky was blue today, or I don't know. No, I'm kidding. There was several contributing factors. I read through just about every article I could find today, just to try to see, not like smoking gun or anything, but is there even a correlation between all these articles out there? And no, there is not. What I found is that no one really had a perfect explanation. I saw everything from, you have the SIBO XBT futures contract expiry today. You had Bitcoin Cash drama ongoing, and the claims of something to do with the hash rate, miners switching from Bitcoin to Bitcoin Cash. And I don't really buy that, but you also have, as you point out, manipulation, and you got market whales that are crashing the market because they know that Backed and TD Ameritrade are coming to the scene, and that they want to buy in before everybody else gets on board. And yeah, there's some other things going on. Honestly, I think this is just I don't think there's a good explanation here. And honestly, we were only down 5 billion below our previous yearly low. So this isn't even really that big of a, it was obviously a big move today. Don't get me wrong. 30 billion in one day is definitely a big move, especially with how sideways the market has been. As I pointed out in the newsletter, 6 of today's top 30 gainers among all of the coins were stable coins. So that tells you just how vicious this was. But honestly, we're already seeing, maybe it's a dead cat bounce. I don't really know, but we're already seeing the market back up to like 188 billion. So it's already recovered, 30% what it lost today. So
it's losing it as we speak, though.
Oh yeah. All right. Cool.
Yeah. There's a red candle that's shown up in the last hour.
Excellent.
So there's I've dealt with this forever, because when people get into investing and trading, one of the first things that they want to know is, why did the price move? And they're looking for correlations, because they say, well, gee, if I know why the price moved, then I'll keep that in my data bank here, and then I'll remember that for the next time. So when I see the same thing happen again, I'll know which way the price is going to move. And what's that commercial? This doesn't work like this. None of this works like that. Okay. So everybody has to go through that kind of phase, is that when you see something moving, the first thing you want to know is, why did that happen? And guys, there's a whole business out there. There are billion-dollar businesses that are out there of, financial media to answer the question why that happened. And, quite honestly, it's funny, because most of what you read in the media is written by some intern with a gun to their head saying, you got to have something out by 5 p.m. Mm-hmm. Here's two things that I want you to keep in mind. There's an expression that comes from the trading floor. So if you've seen the trading pits that are out there with swarms of people in colorful jackets and all, shouting and yelling and got their hands up in the air, there's an expression which goes like this: when in doubt, palms out. When in doubt, palms out. Palms out is a floor trader signal for, I'm selling. If you go like this, I'm selling. This is going to drive the camera nuts, but this means I'm selling. If you go like this, that means that you're buying, right? So when in doubt, palms out. That means that when there's uncertainty in a market, the first thing you do, palms out, you sell. Sell first, ask questions later. So something happened today, and it doesn't really matter what happened today. It was too quiet for the last 2 months. We knew that contraction was going to lead to expansion. Which way? We don't know. More than likely, it was going to move to the downside. That's what a descending triangle should do. Everything is actually according to Hoyle. The second thing that I'll bring up is that a lot of us think that a news item will cause the market to move. So they believe that the correlation between a news item, the market moving, is the news item always comes first, is the main cause for the price to move. I would argue that it's actually the opposite way. When the market wants to move, it will pick a news item, it will pick a catalyst to sort of explain why it moved. I think you guys would all agree that based on the market just basically going to sleep like this and coiling and winding that spring up tighter and tighter and tighter, we knew it was going to move any day now. I just put it on repeat for the newsletter lately, like, okay, range contraction, we're going to be moving soon. So we knew we were going to be moving soon. We don't have a market that goes this quiet for this long without eventually having an overreaction to it. So at the end of the day, it doesn't really matter why. The market wanted to move, just like a market that trends. It looks for any excuse whatsoever to keep going in the same trend. That's why we're always, rule number one, larger time frames dominate the trend. We're always trying to trade in the direction of the major trend. So if you guys can remember those two things and start to incorporate that and get away from the kind of news cycles, get away from the, hey, you got to tune into the news and find out why it moved, and get away from that and start looking at the price and realizing that the price itself is really what you're trading, and it really doesn't matter why it moved. Okay, so.
But it did move.
It did move.
Yeah, at least we have that.
Let's see. So Sam's saying maybe the capitulation happened because we were nearing the end of a huge descending triangle. Could be. It could be, but again, what you'll find is that just because a price pattern sets up doesn't mean that necessarily it's going to, hey, it's not like the price is talking to itself saying, well, I'm in a descending triangle any day now. Well, let's check my calendar. We're due today. It's, guys, the longer that you do this, actually, what you realize is that it does slow down. It does become simple. You stop looking for reasons that you're programmed to think about because you're programmed to think in a certain manner because of all the TV that you watched and everything. You have to sort of get rid of that and just look at the price for what it's doing. It's just a simple supply-demand equation. That's it. That's it. Let's see, Matt. One day, when some coins have a utility, will we still be able to treat these markets like stocks?
Well, they will definitely become less volatile, hopefully. Part of it right now is it's speculative value. That's why it moves so much. Compared to what the stock market did today.
Well, it's funny because the stock market was moving like 1% to 2% today, and people were losing their minds because there's trillions of dollars at stake when the market moves 1%. Crypto market moves 12%, and we're used to this now. It's kind of like what Matt, or was it Matt or Brandon? Yeah, Brandon was saying, feels like crypto. We see a 10% day in crypto, and it's like, so it's, there we go. So hopefully everybody's okay. I was actually very heartened to see a lot of the responses in the Discord page that like people are like, yeah, bring it on, let's go. And that's kind of my attitude right now, because the sooner that we rip off the Band-Aid and just get it done with, instead of this sort of like, hair by hair, we're pulling it off right now, and it's just excruciating to go through this. It's like, all right, let's get it on. Let's just make this thing move. And so I'm sure a lot of you guys want to know, like, where is it going to go now? And I pointed out in the newsletter. Let's see if I can make the camera blur. There we go. So if we look at this, I mean, we certainly have some support levels which are down at about 5,000, and we also have some that are down about 3,000 or so. Those are just support levels. I don't know if we're going to hit those or not. I don't know if we're going to find support. A lot of people are talking about, putting orders in at 5,000 or just below that. That may be a decent thing to do. There may be, and you can watch on the dome to see if there is any support or buying walls down there. We'll know about it. And, it might be good for a trade. You might also see this happen. You might also see you might also see the price bounce up, retest the breakdown level, and then start to kick in. So that is very, very common. It's almost like view the price as sort of like an impatient child that runs out the front door and then says, oh, I forgot to kiss my mom goodbye. And that's kind of what that trend line kiss is. It's a revisitation of the trend line, and then things start to get really ugly. So markets move in waves. They don't just move in a straight line all the time.
Did you try to draw a fib instead of support lines?
Would I do a thing like that?
I don't know. You kind of not been on it today.
Oh, I've been all over the place. First of all, I had the wrong date and the wrong time for today's YouTube live. I was like, what's going on here?
Yeah, I think Matt's got it. It's like you look at some of the things guys were saying even a week ago, and they're like, oh yeah, well, we're gonna see another bull rally here pretty soon here. Yeah, things are starting to look really good. And it's like every time we start to get sentiment like that, it's like, nope, we're out.
Yeah, when the majority see the same thing, when everybody sees the same thing, and it's amazing because, guys, like down here in TradingView, it's like, You know, you guys can read all those things down there, and it's like there's just people every single day pumping out the same crap, like bull run assured. You know, like I've never seen anything assured in any financial market whatsoever. You know, it's just, again, financial markets are there to separate the greatest amount of cash from the largest number of people possible. That's what a job of a financial market is to do. The reason why that happens, it's not because there's some evil character behind the curtain or something like that. It's because people work against their own best interests. People are inherently irrational when it comes to making emotional decisions. We all are. And that is something you have to unlearn or train your subconscious mind to handle risk in a better manner, because people will freak out. You saw people freaking out today, like, oh my God, this is, you know, I thought I was going to go higher, and all of a sudden I'm on the wrong side. It's like, imagine somebody in a sailboat, right? The wind, you got the, you know, you're leaning into the wind, you're hanging over the edge, you're trying to balance out the boat, and all of a sudden the wind shifts. You know, you're going in the water, you're going to take a swim. And that's what happens when markets move like this. All of a sudden it catches everybody off guard.
We'll say it'll be kind of fun once we are able to see a shift, a true shift in things. Because, you know, this is the, yeah, it's the same stuff we've been talking about for better part of a year now. And yeah,
On and on and on and on. Yeah, ad nauseum. I mean, we've been saying the same thing for the longest time. Like, hey, it's a weekly downtrend. It's a weekly downtrend. It should break lower. It should break lower. It can break higher. It can do whatever it wants to, but I don't trust to break higher until we go lower. If you want the price to go higher, it's got to go lower first, because you've got to get the investing herd on their heels. You've got to get them on the wrong side of price. Markets typically do not recover from a bear until everybody just finally just says, I give up. I can't do this anymore. I quit. I mean, I actually talked to somebody on the phone today that said, I quit. I can't do this anymore. And I'm like, okay. You know, you start to tally them up, and pretty soon it's like, okay, you know, you're going to miss out on the move. But that's all right. You know, everybody has to learn.
Yep.
That's the reason why they call it the disbelief rally that comes from the bottom of the bear. Nobody believes it. Nobody gives it any thought. They're like, oh, I'm not going to jump on that rally. There's no way. That's why they call it the disbelief rally. And that's why the smart money is on board. Matt's asking about Ripple.
Yeah, so look, I've been loosely watching what's going on with Ripple and that sort of stuff for a while. I don't know if you remember, I made a video probably I think like July that went through the top 10 and kind of speculated, you know, which one of them are a security or not a security or sort of in between. And the general consensus I had with that video was that most of the top 10 are, you know, decentralized enough to warrant them not being securities in the eyes of the SEC. That being said, Ripple was one of those candidates for could be, could not be. And I think what we've seen in the past week with them moving the class action lawsuit and clumping things together and then moving it to the higher court. Yeah, I think this is sort of do or die time for Ripple in terms of its, you know, the XRP token in terms of its security status. I think there's, you know, sort of not a reckoning, but I think if it is deemed to be a security, which, you know, very, very well could be, then yeah, that will make things a little bit more difficult for them. I don't know if that's going to be the death toll for Ripple. They are certainly making some progress with XRapid signups, and I think once whatever comes out of this court case, I think that will be. You're right. I think there's a catalyst there for them to be able to move forward, good or bad. But you know, get it behind them and yeah, move into whatever they're trying to do. But yeah, they seem to be doing so many different things at once, and as we saw the CEO comment yesterday, he doesn't even seem concerned. He seems like his target right now is taking down Swift and becoming the next Swift network. And I don't know. It's good to see confidence, but at the same time, they're it's a very serious lawsuit they're facing. I think the total litigation is like over 100 million in terms of outstanding, what they're standing against. So yeah, we'll see. That's definitely an interesting thing going on right now. But yeah, Ripple's they're doing a lot of stuff.
Look at that. Chainlink is a monster.
Oh yeah,
It's a monster. That one has left the station.
cool.
So you guys can see this one is actually going parabolic. Sweet. Let's see. Okay. Any other questions that you guys have? I mean, this session is for you guys. We don't have any agenda or
Yeah,
any
do want to follow up from last week. I think it was KJ who asked about Veritasium and what was it, mainframe. So kind of looked into both of those. I had looked into Veritasium, I think like a year ago, and the general consensus was that it was a scam. I don't believe that is the case. I think they do a lot of aggressive marketing and kind of like bravado type marketing, and they just like oversell it basically. And they've got some other kind of red flags, like they don't have a white paper. What they're doing, their product, the peer-to-peer marketplace that they're building, not very interesting to me. I don't like proprietary marketplaces like that unless there's some sort of like built-in liquidity. Like I was talking about in today's video with 0x and how District 0x shares that liquidity pool because it's built on top of both the 0x protocol and the Ethereum network. That being said, yeah, I don't think it's a scam. I just don't really find it to be that interesting of a project. So yeah, I'm not going to buy that one. Mainframe, on the other hand, they are doing things. They've got some interesting pieces behind them. Let's see. Definitely what I looked into, I remember I looked into this because I was going to include Mainframe in one of those videos where I talk about, projects that are interesting, you might want to check out. This was back in July, and I was about to add it to the video and cut the video, and then I started to see guys like Supoman and Ian Bellina, shilling directly Mainframe, and I'm like, oh no, thank you. They can do what they want to do, but I'm not going to be associated with them. And it did end up that they were getting paid by Mainframe to, shill for them. So that was not cool. I don't like when I see stuff like that. So I just kind of palms up, didn't include it in the video, and I kind of moved on. That being said, in the last 4 months, I think they have done some interesting things. I think they've got, one of the better organized projects in the space. They've got some really big names for their VCs, like the founder of Dig and like Japan's best football player. So, like that's cool. And what they're building with the decentralized web, with dApps on top of it, that's cool too. The big thing for them is that they're launching their MVP v.0.1 tomorrow, and that's good. There's going to be some developer tools in there and kind of a sneak peek at what they're doing with the decentralized web that they're building, and sort of preventing all this data mining that people in this day and age are becoming increasingly aware of. You got your Facebooks and your Googles just like selling your data, and that's where projects like Mainframe come in and try to counter that. So anyways, all that said, they're doing cool things. They're making a launch tomorrow. Their big launch, which is MVP 0.2, is coming out probably sometime in Q1, Q2 2019. And, that's interesting. I don't find them to be the most interesting project out there, especially concerning sort of this decentralized web application. But, it's not a scam from what I can see, and it's certainly they could certainly do better with marketing and all that. But I think they're pretty on point with their brand and what they're trying to do. And yeah, they need better awareness, and they need to be more social and interact with the crypto community a bit more. But yeah, it's not a bad project. It's just I don't find it to be extremely interesting. So hopefully that helps. Those are my takes on both those projects. So let's see.
Okay, Annie was asking about Polymath and Swarm. So Swarm City Token, if we look on the daily chart here, probably if we go out to something like the weekly chart, how's that trend? How's that trend looking there? So that kind of answers that for you here.
Is that the right one though? Swarm City? No, Swarm City. Oh, I remember. I think I participated in that ICO. That's not Swarm. That's Swarm City is trying to be like a decentralized Uber.
Okay. Is there a different ticker I should be looking at?
I think it's SWM. Yeah, they're pretty new, and they're only on HitBTC and like IDEX, so they're probably not going to be listed on.
It's not listed on. It's not on a trading view exchange. So let's go to Poly.
One thing I do want to say is that I met the I think he was the CEO of Swarm in Las Vegas, and he gave me his card. So if you find that I would not recommend trading on HitBTC, and the volume on IDEX, because it's a decentralized exchange, is not very good. So if you want to if you want to purchase Swarm, reach out to me, because I can give you his contact information, and you can do an OTC trade to just pick up SWM tokens and not have to go through the exchange process, because if you're trying to get a lot of them, I was trying to get 50,000 to get a masternode back when it was like 7 cents or so, and I just couldn't do it because there wasn't enough liquidity. It was really frustrating. So yeah, if that's at all interesting to you, just reach out to me and I can help with that. But yeah, Polymath is doing things.
So we actually have there's a weekly uptrend on Polymath. If we look at this, it's just going through. It's going through a decent pullback right now. Let's throw a chop on here and see what we have on the weekly chart. On the weekly chart, there's not enough data to really throw much of anything yet. So that's one of the problems with new cryptos, is that we have to sort of fly blind on these. But right now, as long as this prints higher highs and higher lows, so what you've got is a short-term downtrend right now. This trend line, before I would take any longs, I would want to see this higher low here act as support and break this descending trend line. On good energy right now, this is actually showing a deficit of energy from the downtrend, so that's not necessarily a bad thing to see a nice higher low here and a pullback. So just that's my read from a price perspective, not fundamental. And Oyster, I don't know what their ticker is.
Yeah, Oyster had the big what was that, like, not exit scam, but it was definitely a big mess up. I don't know. Yeah, I haven't really looked into that. What happened after that? It just seemed like it was a mess. It was unfortunate to see, because the project I think has been doing a lot.
Oh, that's the one where that one guy walked away with. That was 2 weeks ago.
Yeah. So I mean, I haven't really caught up with what's happened since then. The guy came out and made a statement, but he was making all these like really weird, I don't know, just it's a weird, messed up process, and like this highlights why you need to make sure that you're investing in projects that, first off, have their smart contracts locked down, and you can't do another token sale on top of the token that's already been issued, and secondly, that like the founder or the head honcho guy or whatever is not anonymous, because that or just anyone on the team is not anonymous, because I just don't trust that unless that's what you're looking for. But yeah, that it sucks. It's too bad that happened, because I think there was a lot of people who kind of believed in that, and they were doing some interesting things as it relates to like the crypto jacking, but like ethical crypto jacking, and like advertising and all that sort of stuff. So yeah, I don't know. maybe I can follow up in a week with that and see if there's anything I can learn. But yeah, Oyster is probably going to take some time to recover, unfortunately.
Is it fair to assume that a lot of the coins that we're collecting could create a security token to gain more funding, thus making the utility coin worthless for speculators in this space?
That's an extremely interesting question. Yeah, I suppose, because I mean, the argument is, if the utility token is not equity in the company or whatever, they could just issue a security token that represents the equity of the company while they have the separate utility token. That's, I haven't seen anything like that so far, but we're definitely getting into the territory where that could be possible. I think you're onto something there.
Yeah, I mean it's like what we see with equity companies right now.
Mm-hmm.
It's like you see supply and demand of there's only so many shares outstanding
Mm-hmm.
that are out there, and you see companies doing buybacks or buying back their own shares, and that increases scarcity and increases the price. Or you can see them selling their own shares and things like that. And everything is a supply and demand equation.
Yeah. So definitely, I have to emphasize that like we're on the precipice of a complete disruption movement in the capital formation process and how we do fundraising and crowdfunding of companies and real estate, and we're on the precipice of tokenizing the world. I suppose it's going to be quite an interesting time, but a lot to do. Definitely, there's it's going to take time, but
So Joshua is asking about longs and shorts. So when you hear people talking about longs and shorts, a long is somebody that is buy to open. So this is what you're used to. So 99% of the world is long only, where you're buying something to own it and you're hoping that the price appreciates and goes higher.
Mhm.
So to clear that position, you have to sell to close. So buy to open, sell to close. Now the opposite of that is a short position. And the first time this was explained to me, it made no sense at all. You're selling something to open it. But what's weird is that you have to borrow it first to be able to sell it to open. All right. So you have to borrow it at an interest rate from a broker. You're selling it, you're borrowing it, and then you sell the position to open, and you hope the price goes down from there, which you will buy back later. So the more sophisticated investors are generally setting up shorts, right? So you see these, the BTC USD shorts and things like that. You can see people, you can see generally the short interest on a position. You can see, do we have potentially a big, short, a bear trap, right? So a bear trap would be you trap a bunch of bears and you force them to squeeze out. You get a short squeeze to the upside. So that's kind of the nature of it. The majority of investors are long, right? And the more you get into that's not necessarily the case when it comes to equities. It's still the majority, but you have a lot of hedge funds that are short only hedge funds. And, it's interesting because 10 years ago in September in 2008, the U.S. government issued a decree one day right out of the blue, and it was on a Thursday evening, that said, thou shalt not short financial stocks from this point forward. In other words, if you own a naked short position in a financial stock, you must liquidate by tomorrow morning. And that was insane. It was crazy what happens to it. If there's a market that does not have a whole lot of short interest, you generally don't get these explosive moves to the upside. You have to have shorts in the market to get explosive upside, which doesn't seem to make any sense. But the more you think about it, the shorts covering on an emotional basis is what causes some of these rocket-like moves to the upside. So hopefully that helps, Joshua.
It was kind of interesting looking at the ratio of shorts to longs today. We actually appreciated more longs than we did shorts. So that kind of tells you what maybe some people are doing in anticipation of where the market is going. But we'll see.
He's saying Tesla shorts usually don't have a good reputation. Well, Well, there's companies through the years. I mean, so I don't want to get into the equity markets here, but like for example, Overstock.com had a holy war. There was a jihad between the between hedge funds that were 100% short on Overstock versus their CEO. And the CEO would do everything in his power to prove them wrong by making the price go higher and putting pain on the shorts, and the shorts would just double down. And recently, what happened with Tesla was that all of a sudden Elon Musk came out of the blue. I mean, these hedge funds are like, we are short on Tesla. We hate you guys. We think that this company is headed for the dumpster, and Elon is just a walking mess. And all of a sudden Elon Musk sends out a tweet that says, "Oh yeah, what did he say? Something like, yeah, we're going to go private, and the funding has been secured
at 420."
Right. So all of a sudden, like literally out of nowhere, this happened, and it just short squeezed like crazy. Right. It just put the pain on him, and then 2 days later, all of a sudden, it went plummeting back down again when they realized that was like an illegal statement. You can't just say that if you're the chairman of the board. Yeah. Without so that's the one thing where equity markets have been. There are some very tight restrictions around what you can and can't say. There's a quiet period around earnings and things like that. Whereas with crypto, there's none of that. Yeah. This is still the Wild West.
So I want to answer Anne's question because she's asking about a lot of my like legacy picks in terms of like the projects that I've pumped up in the past, and am I still interested in them? And of course I am. I the fundamentals I think are still good for a lot of them. Are they the moonshot killer projects that I hope they are? Maybe not. I think they're doing interesting things. I think what we've found throughout this year, why we've been in a bear market for 11 months is partially because blockchain is really hard, and innovation and like changing things and innovating on top of something that has existed for 50, 100 years is really hard. There's a lot of things to do. There's a lot of things to test. We have to, iterative progress. Blockchain is certainly a great invention, but it needs time for maturation and really getting it solidly built, and smart contracts are coming along, and it's going to take time. It was actually kind of funny at the Ethereum DevCon, they were shunning HODL for Buildle, because that's what we need right now. We don't need just people like plunking down money. We need to build things. And anyways, so those projects I think will continue to be decent investments. But what we're finding, especially moving into 2019, is that you're going to have the legacy crypto market, and it's going to continue to do what it's doing and what it's done, and there'll be the questions of our ICO securities and yada yada yada. There's going to be a lot of developments that are happening in the crypto sphere, and we're certainly not stepping away from that. It just hasn't been very interesting for the better part of a year now. At the same time that's happening, we also have the equity markets over here that are doing their own kind of thing, and they're highly regulated and they're not moving much, but they're over there and doing that. Whatever. What we're going to see over the next couple of years is sort of the hybrid space evolve between the two that sort of combines the best aspects of both. And that's where I'm trying to learn more about, where I'm trying to push our efforts more towards. And that's partly security tokens, but it's not just security tokens. It's not just like, it wasn't just the ICO that made the 2017 bull run happen. It was a lot of the infrastructure that was already in place to facilitate that, a lot of the active interest that was there. So we have years, decades even, to develop this interest in the sort of hybrid space that exists. But the good thing with this sort of hybrid space that I'm describing is that we're talking about tokenizing assets that are already in existence. We're talking about tokenizing real estate and companies. And once we have the infrastructure in place and the means to make that happen, that's an incredible opportunity. Once you're able to, if you have an idea for a company and you want money to make that happen. You need investment to make that happen. Instead of going through a bank and getting their ridiculous interest fees, or going through a firm and having them take part of your equity and all this other stuff. Instead of doing that, you could go straight to investors and utilize this very lightweight, pennies on the dollar platform, this model that we're developing right now. And I think that's especially, you could do that domestically and internationally at the same time. That's incredible. That hasn't existed before, really.
Without having to go through Goldman Sachs and pay them $500,000 to list you.
Yeah, exactly. So I think we're in for a huge referendum on not just the way that we're doing technology and all the different industries that we're disrupting, but we're disrupting the financial capital formation model as well. There's a lot of potential there. There's a lot of interesting things. So don't get me wrong. I am still very interested. The crypto space is still dear to my heart, and is very interesting. I think will continue to be, and we're in for some really good years ahead in terms of once we're able to find some more scalability solutions and really ramp this thing up in terms of adoption and regulation and all the other things you've heard me say, and Doc say over the year.
Seems like years.
I know, right? We're also going to be seeing this develop, and I think that presents a lot of really interesting possibilities and roads that we can go down. So, yeah, it's a good question, and it's one I unfortunately get a lot because people, I think, got into the space and they had expectations about sort of overnight millionaire or whatever, and there's still opportunity, definitely there's still tons of opportunity in crypto. It's still very much the first inning of what is going to be a very interesting and long game. But yeah, it's going to take time. I think that's what I need to reiterate over and over again for people, is that we're still seeing things being built, and being tested, and there's a lot of trial and error when you're trying to reinvent the wheel, I suppose. But yeah, we aim to build a better wheel. I don't know. A good metaphor, yeah, maybe.
Yeah. Any final questions for us here?
Yeah.
Anything else that you guys have on your mind? Again, today was the very first day in a long time where we've actually seen some volatility, and that's good. We need that volatility, even though a lot of people are very uncomfortable with seeing that big red candle show up. It can be a little scary the first time you go through that, but ultimately, there's a reason why you have forest fires occur naturally out there, so that it can
too soon
rebuild.
Too soon, California.
Yeah, well, we're in Ohio.
Right. Yeah.
So, but seriously though, if you're out in California, hopefully you are safe and not somewhere. Man, they've had. I mean, this is not the first round of fires that they've had this year.
Yeah.
So, okay. What do you think about flat Earth? Okay. There you go. Perfect. Well, with that, I think we will say goodnight to you guys.
Yes.
So, you guys take care, and we will see you.
Hang in there, guys.
Yeah, we will see you shortly. So, thanks, everybody. Have a good night, and enjoy that big red candle. Take care.
Flat Earth.
There goes a sight from my soul. There goes a sight. Now there goes a sight from my soul. There goes a sight from my soul.